And it's 1 p.m. That means it's time to do business. That's what we do here in Business Incorporated. On the program today, we'll take you all the way to Houston, where the World Energy Conference ends. Our correspondent, Olu Phillips, has been covering it, and we'll have a conversation with him on the program. Egypt is set to reduce fuel subsidies following the recommendation by the International Monetary Fund. Zimbabwe is targeting 120,000 hectares of winter wheat. Good afternoon, welcome to the program. I'm Ini John Mekwa. We start business as usual from the global space. Oil prices rebounded on Friday to recover some of their losses of more than 1% in the previous session, partly because of diminishing prospects of a quick end to the Ukraine war that could bring back more Russian energy supply. So we see a 64% increase on that, 0.9%, and then 67 for WTI, $67.26 after it increased 0.67%. So we see this after it settled 1.5% lower in the previous session. And then we know that this is after the response of President Vladimir Putin of Russia, where he said that Moscow supported a U.S. proposal for a ceasefire in Ukraine in principle, but sought a number of clarifications and conditions that many people have seen that could rule out that quick end to the fighting that's been going on in Ukraine. And then away from that, now we head to the metal space, where we see what's happening with those metals. Gold, for instance, is hitting a record high. We've been looking forward to $3,000 for gold for a very long time. Well, it did that, even though it's lost a bit of that. It hit that record high before we came on air, but at this time it lost 0.1%. It's now at 2,983.78. So the $3,000 level, I hope you didn't miss it. Perhaps you just saw it. U.S. gold is still up at 2,996. Gain 0.2%. Spot silver is on the flip side, $33.72 after it shed 0.2%. Palladium is unchanged, while platinum is unchanged, while palladium is also still on the upward trend, $964.32 after it gained 0.7%. And we know that Trump's tariff are widely expected to stoke inflation and economic uncertainty. And this has prompted gold to reach multiple highs because a lot of people see the metals as a hedge against inflation. So that's why we saw that new high that gold had hit, even though it did not sustain it up to this time. Now, back here in Nigeria, the Universal Service Provision Fund was created to serve as a critical instrument in the federal government's mission to extend connectivity to the unserved and underserved communities. The effectiveness of the fund was at the center of a meeting convened by the Nigeria Communications Commission in Lagos. It's an industry-focused stakeholders engagement session to elaborate and enlighten all concerned about the Universal Service Provision Fund, USPF, by the Nigerian Communications Commission. For the Executive Vice Chairman of the NCC, Dr. Aminu Maida, this engagement themed Strengthening Partnership for Sustainable Telecommunication Infrastructure in the Unserved and Underserved Communities, Collaborating for Sustainable Growth, reflects collective commitment to ensure equitable access to telecommunication services for all Nigerians, especially those who are underserved.
I am confident that the deliberations from this engagement will lead to actionable solutions that will derive progress, foster economic development, and ultimately transform lives through connectivity in most remote corners of our nation. Together, we can build a future where digital connectivity is a fundamental right, not a privilege. Let us remain steadfast in our commitment to ensuring that no community is left in the digital dark.
The Minister of Communications and Digital Economy, Mr. Bosun Tijani, is a major stakeholder, and for him, the USPF should give priority to upskilling if it to be successful.
Bridging the digital divide is not a task for governments alone. Sustainable and impactful progress requires strong partnership across both public and private sector. To access the internet is only beneficial if people have the skill set to productively use the access. Therefore, ensuring that digital literacy programs, skills training, and entrepreneurship development are integrated into our overall investment in infrastructure and connectivity strategy is also an important focus.
The meeting is expected to provide valuable insights and strategies that can be adopted to enhance USPF interventions and serve as a feedback mechanism to build partnerships for Nigeria's digital future. Now, the Lagos Chamber of Commerce and Industry, as well as the National Insurance Commission, say they are determined to boost the contribution of the insurance sector to the gross domestic product. To achieve this, they organized a forum to share ideas with stakeholders in Lagos.
Since the reinforcement of regulation on vehicle third-party policy. More could be expected as members of the sector hold this forum to discuss the role of insurance in economic recovery.
Oftentimes what people hear is the big investors, but they do not bother that how are those big investors standing? It's the insurance sector that keeps them standing. So, and that is the role we are meant to play, right? We take all of those risks and allow them to venture. And that is where we become very relevant as the economic stability and risk management factor that we represent. Also in terms of wealth and asset protection, and then giving confidence to our investors to be able to perform.
Insurance keeps businesses in all sectors, and the Lagos Chamber of Commerce and Industry connects all.
How the insurance industry can contribute a lot more to the economy, because without insurance, you cannot have an economy. All these big businesses being built, they cannot be built if there is no insurance. All the vehicles on the road cannot move unless they are insurance. They cannot be replaced if anything happens to them. So the whole conversation today is how to make the insurance industry bigger and much more effective in contributing their role to the growth of the economy.
The finance and insurance sector's real gross domestic product rose to 30.83% in the third quarter of 2024 on the tight monetary stance of the Central Bank of Nigeria. Players in the sector are hoping that conversations like this will boost the sector's offerings and growth.
Now let's head to Houston, where Olu Phillips has been covering the CERA week all week long, and it ends today. Hi, Olu, how has it been there in Houston?
Good morning. It's morning. We're still a bit grumpy, waiting to join the early sessions for this morning. Good morning to viewers and wherever you are in the world. Good morning or good afternoon to Nigeria.
So what has the conversation been there? Listening to some of the things that are being discussed, there's the issue of talent, also consider the human resources in the oil and gas sector. But what are the major highlights of conversations at the CERA week?
Okay, so I think, let me start like this by saying that the intersection of policy, politics and finance and technology as it relates to energy didn't used to be as significant as it is today. So first of all, over 70 countries, leading countries had their national elections, and that has led to significant change in energy and climate change policies. So here in Houston, the conversation is very straightforward. Countries are beginning to, it seemed like we all woke up and realized that the future of the future of carbon markets, for instance, is shaped by the interplay between voluntary and compliance market. Voluntary and compliance market, meaning that it seemed like we didn't do our homework very well globally. Everybody just thought that there was going to be a magic wand or one fell swoop instruction and everybody's going to align. Countries are beginning to shift. Like I said, over 70 countries had their national elections. And what that meant is that governments are beginning to come in to ask themselves, what is really this whole conversation about? So it's either about climate change, mitigating climate change, sustainability, but how about the fact that some of the technologies or some of the conversations around mitigating climate change isn't as sustainable or isn't as affordable as it should be? So, everybody in this conference is looking or looks towards the United States of America to signal a new direction, and that has happened. For instance, the US wants to resurrect, if I use that word carefully, their mining industry. And they're not just mining. The government of Donald Trump has released or has asked senior members of his cabinet to be at this conference, Secretary of Energy, Secretary of Interior, and all of them are here discussing how it is that if you want to do business in mining, if you have technology, if you have, of course, the US want to win the AI war, come into the United States of America and invest. And that alone has triggered a lot of conversation around what national governments should be doing or want to do as far as all of this conversation around climate change and energy transition. That conversation really has waned. It's slowing down. It's being reviewed. It's being reformed. AI is playing a major. We've seen that. In fact, there was this session I attended where seven innovators were introduced, and these guys, 6 of them actually. And these guys have developed a technology where methane data solution to help cut emissions, boost profits, and meet businesses. Can you imagine a conference like this where even insurance companies are attending because premiums are increasing and they're looking at the nexus between how all of these policies of energy transition is affecting investments, and if you do not have the right investment climate, like the SA Minister for SA to the President on Energy was saying, that there isn't any sufficient data to suggest that mitigations against natural disaster, for instance, can be measured in such manner that if you're coming to invest in clean energy, you can take that data, mine that data, and use it for your bottom line. That does not exist. So everybody's practicing what I could call indigenization in terms of what works for them. And I think because the US, which is the biggest spender and the biggest director of this orchestra, is conducted right now, be it by the chief conductor, Mr. Donald Trump, countries like Namibia, South Africa, Morocco, Nigeria, are all having a very strong representation here in the US and making cases for themselves. And it's a case of, you know what? For those who are members of the faith-based community who would say, to your tent, O Israel. So it seems like everybody's going home and saying, you know what? What was it that I neglected so much? And mind you, Ini, this is where the challenge is. The fact that you discuss transition energy, green energy, carbon cuts, carbon credits, and all of those climate mitigation and all of those strategies, did it in any way reduce the demand for energy? It didn't. So it meant that in Europe, for instance, during the winter, you need gas to heat your homes. During the summer, you needed same gas or electricity for your air conditioning system. So at what point did demand slow down for energy? Africa is noted here at this conference to be a continent that will have the highest number of youth population in the years ahead.
Okay,
what preparations are we making, really?
Yeah, so as the conference ends, because we attend these conferences, they're slated for the year, you check your calendar, you have to be here. And of course, the President Donald Trump seems to have changed the tide, even as you said
completely.
So what is the takeaway from this conference now? Is it, as you said, everybody go to your country and explore everything or anything that's available for you, as long as it will give you electricity or energy? Doesn't matter the consequences or the global impact and the messages which have been preached even before now. Is that what it looks like? participants will be going home with from the CERA week?
I hate to say a blatant yes, but a yes with a caveat. The caveat and the big caveat is that even the US acknowledges that technology is playing a very big role. I just told you how even there was a representation from the steel industry where they're galvanizing some technology to invest $2.2 billion in a system or in the technology that allows a replacement of different kind of steel, but with the same kind of quality. So even for the construction companies, you have something going for you in terms of technology. AI is a big deal. The question to really ask is, when you come back home at Nigeria delegates, for instance, you ask yourself, what is the Nigerian need? And how do we solve that need? We have grid challenges. There have been technologies introduced here on how to safeguard your grids using robots and using all of those AI technologies. What really works for us? What are our population? We hear that a lot of our population members do not have access to the grid power. What are we actually doing? Now, the biggest takeaway is the fact that anything you choose to do as far as the energy transition conversation is concerned, there is money, there are investors, there is technology, and there are the people to consume it. There is the finance corporation to finance it. Unlike when it looks like there was a blanket sign off on some of these spendings and say you cannot put money on fossil fuel. Nigeria needs to take advantage of its huge natural resource. Go back into mining, do it right. Go back into exploration, do it right. Go back into any kind of technology you can use to provide energy for your people. And I believe the president and as led by the SA Energy here, Oluvan High, have been making a very strong case for that. I just want to see that being matched with massive action. And you can imagine what will happen if, for instance, a state like Lagos is only 24 hours power with a power mix or energy mix that suggests that if you're living, for instance, in the Keja area, you have this kind of power. If you live in the areas of Lekki or Badagry, you have this kind of power. Everybody's energized. The economy is energized. The balance sheet becomes well balanced between assets and liability. And you can be sure that if you develop your national assets, your natural resources, they become your national asset and they become your strongest negotiating instrument on the balance sheet and for any kind of negotiations you may want to. So this is the best time to do business everywhere in Africa, especially in Nigeria, which proudly I represent.
Yeah, I see that, Olu, representing right well there, but you represent better if you can challenge those government officials to come back home and practice what they've heard there. And learn from President Trump, Nigeria first, Let's use our potential, as you said. But thank you so much, Olu Phillips, Channels Television correspondent all the way in Houston there, covering the CERA week, which ends today.
Thank you.
All right, now let's take a break. When we come back, we'll head straight to the market for intraday numbers with Will Ebon. So stay with us. Welcome back. It's still Business Incorporated here on Channels Television. We'll head straight to the markets with Will Ebong. Will, tell me you have good news from the NGX.
Oh, well, no good news for the NGX. At intraday, though, we know that rebound we saw yesterday where, we saw companies like O&O coming up to prop the market up. We did think it will be sustained at intraday today, but no, investors are hungry for profits, and they went there today and clawed out the little we thought we could. But we don't know. The market, has
but I think for the week we might still see a positive, because I remember our first gain for the week was about 258 billion, and then the next one we lost like 5, and then yesterday's gain wasn't as much as 200,
but still a bit significant.
Yeah,
to be able to hold
fingers crossed at the end of the week we'll still have some gains left.
Let's hope there'll be a reversal and the market tilt back to positive territory at the close of business.
Yeah.
So let's see the stocks we track at intraday. We see equities were mixed. Nigeria's NGX was slightly down at intraday by 0.15%, still at the 106,000 level. But we'll look at quickly in South Africa, the JSA there, we see it's up 0.92%. That's nearly 1% up. Elsewhere, Egypt's EGX was closed Thursday, but in the green. Let's look at that very quickly. 0.78% to close the week. And in Nairobi, Kenya, we see the stock exchange there closing 1.08% down for yesterday. Let's hope that at the close of
business today will see a positive turnaround for that equity. Now, before we proceed to other equities in other regions, let's shift our gaze now to the fixed income market in Nigeria. Bankole Odusanya, Chief Dealer, Treasury, Polaris Bank, joins us. Good afternoon, Bankole. There was a Treasury bills primary market auction on Wednesday, good afternoon, where we saw an uptick in stop rates. Now, give us a breakdown of that result.
Okay, so the lowest we had seen, in the quarter for the Nigerian Treasury bill stop rates was 17.8, which happened last week. So this week we saw an uptick to 18.3%. That is discount rate for the 1 year, which is the major benchmark we always discuss. What's happening is that we are seeing some reduced interest from FPIs on OMO instruments. System liquidity is also an issue because the central bank continues in its monetary policy stance of tightening. As we speak, the system liquidity is about a deficit of 800 billion. So basically, one other issue is that the DMO also is trying to issue another 800 billion Nigerian Treasury bills next week. That makes it 3 consecutive weeks of issuance of Nigerian Treasury bills in a system, with the system liquidity, which is already very tight. So basically, going forward, we expect yields to continue to inch up from that about 18.3 to closer around 19% discount rate. For OMO, we expect OMO bills to also inch up. Should there be OMO offer to mop up liquidity, that is going into the end of the month, we expect that OMO bills should also cross into closer to 20%, basically. So what's happening is that system liquidity and a little bit of reduced interest from FPIs in Nigerian OMO instruments are, deriving from what's happening in the US, where there's some fear, of some global economic crisis or market crash. We've seen that some people are simply just going back to cash, selling equities, selling fixed income securities, especially of sub-Saharan African sovereigns, to simply go back to cash. So we're seeing a bit of flight to safety here and there, and that's having some impact also on the FX rates. 2 weeks ago, we were beneath, 1,005 at 1,495. That's the EFEMS market. As we speak today, as against today, the rates were closer to 1,550. It's moderated down today. We've seen trades at 1,520 and 1,535 levels. But basically, the pressure and reduced interest from FPIs is what is playing out in the markets in the Nigerian space.
Okay, you mentioned the 3 consecutive auctions we've had right now. And looking at the calendar, if we can have that up there, the trend is that we have 2 auctions in a month. But now we're seeing 4 auctions for the month of March, which is quite unique. Why is that? And also, before you answer that, the minister did say that, the government is cutting domestic borrowing ratio by half from 80% to 40%. If that is the case, why do we see this ramp up in borrowing in the auction calendar?
Okay, for the first question, before rates inch back up, we believe the DMO is trying to conclude its borrowing for the first quarter. So we are currently at 18.3. It's cheaper to borrow at 18 compared to the 20% where Nigerian Treasury bills were in December. So that's one move. On the other hand, the third auction that I spoke to you about that will be happening next week, settlement 20th of March, is happening because the the DMO has reconsidered. Initially, from their first quarter offer calendar, they had tried to reduce offer of treasury bills by 800 billion, but they simply brought that back. We believe they are simply trying to front load their borrowing at the cheaper levels that we have, that is 18.3 discount. If rates go back to 20%, they'll be paying in excess of 20%. So that's the first question. For the other question that you asked about the Minister of Finance, yes, if you look at where crude oil price is presently trading at 70, it's beneath the oil price used for a benchmark in the Nigerian budget for 2025. The budget price for the crude oil benchmark was at $75 per barrel. International markets are trading at 70. In fact, it had got as low as $68 per barrel. So that deficit widens. Of course, going into the rest of the year in order to cover the budget deficit, the minister has explained that they will be borrowing more from the external markets. Of course, we expect rates to moderate, just as the US Fed are also planning to cut rates, just marginal reductions over there. But we wait to see how this plays out. So basically, that's what's happening on that end.
Okay, so you just talked about the external borrowing to, cover up the gap in the budget, the deficit we're seeing there. But latest data we have from DMO says that the CBN data says that Nigeria has spent so far $817.4 million to service debt just in the first 2 months of 2025. If this is already what we have currently, what do we see the government? How far do you see the government going in terms of borrowing and in terms of debt servicing? Isn't this just going to be, increasing the amounts that we currently have?
Yes. One factor is that we'll be having a bond maturity. Of course, that maturity reduces your external debt stock, and then they probably, simply just replace it to fund new projects and the deficit gap that we spoke about. Of course, on the side of DMO and Ministry of Finance, there's probably prospects to take revenues from crude oil exports from 1.5, 1.7 million barrels per day to 2 million barrels per day. So that's the projection. Of course, if we do not see those revenues come from crude oil, then we may not also, see the kind of expenditure that you are talking about. This is just a plan and not an actual spending in itself. So basically, it's just a plan to spend and then borrow. It depends on how much revenue you raise and then the gap. How much gap we have actually created that is meant to be covered. So this is just a projection.
Well, how do you see the government? They've talked about reducing debt servicing and reducing borrowing. How do you see the government cutting costs? Yes, we know that oil prices have reduced, falling, below the benchmark price that the government has set. How do you see the government funding the budget without borrowing? Is there any other means that the government can use to borrow at a lesser or cheaper rate, especially now that we're seeing these tariff hikes, going on in the US and other, Western countries?
It's an uphill task, especially if you've seen that the initial projection for 2025 budget was at 49 trillion. It's now been moved to 54 trillion. Of course, we know that external debts will be funding a major gap the majority of that gap. We need to be more productive, and we do not think this can be achieved within 12-month calendar period. We think that it's a long-term plan, to fund the infrastructure, invest in the people, and then block the infrastructure deficit that we have, so that we become more productive, especially with electricity and distribution networks for food. Because now it seems we're doing better with food security as prices of food have, marginally dropped, as we have gathered from the markets. Of course, petrol prices also marginally dropping. So productivity on the long run will help improve revenues and reduce debt stock and debt servicing in itself. But it's an uphill task. I don't think this will be achieved within 12 months calendar period.
Thank you so much, Bankole Odunseya, Chief Dealer Treasury at Polaris Banks, for sharing your perspective with us on Business Incorporated. So now let's look at other markets now in the Middle East. Its major stocks exchanges were closed except in the UAE. Let's see Dubai and Abu Dhabi. Mixed trading there, 0.98% down for Dubai. Abu Dhabi up marginally, 0.07%. Let's look at the other markets in Saudi and Qatar. They are closed Thursday, but they were closed also in mixed, territory, 0.18% for Saudi, and Qatar index down 0.14%. Let's check it in on the U.S. market. Stock futures rebounded on Friday in pre-market trade after the S&P 500 entered correction territory. The Dow futures gained 0.42%, S&P 500 0.66%, while the Nasdaq gained 0.89%. Now, we see Wall Street sentiment has improved as government shutdown appeared less likely after Senate Minority Leader Chuck Schumer signaled support for a Republican funding bill. Now, despite this, the Nasdaq has fallen over 10% this year, and the Russell 2000 is nearing bear market levels. The Dow is on track for its worst week since June 2022, while the S&P 500 and Nasdaq face their fourth straight losing week. Investors now await consumer sentiment data and next week's Federal Reserve meeting, where rates are expected to hold steady. Let's check in on Asia markets now, where we see it's quite, mixed in that region. Look at mostly in Japan, we see it up 0.72% to close today's trading session. We see also the Kospi in South Korea down 0.28%, and the Hang Seng in China is up over 2%. That's a big one there. And the movers in that region, we see top performing stock like BYD in mainland China surging 0.6%. Now we see also Indian markets were also closed. They're closed for a public holiday, so we don't have that numbers, but they were closed in the red for yesterday's trading. So that's what we have for Asia markets, Ini, and also hoping that the markets for next week, kind of react, positively as we see the U.S. markets rebounding, from that bloody uncertainty they had. It's more like, okay,
yeah, well, I'm almost sure that we haven't heard the last of the 200% tariff threat, and perhaps even more.
Maybe it's a dream. A dream.
So we'll see what happens over the weekend, and that, of course, markets will react to by Monday.
And I hope the EU doesn't come with a retaliatory of 500%, and then it goes on and on. And
if it's America first, then it's your country first. So
definitely, and you did mention with Olu, Nigeria first. Let's see how that plays out.
All right, Will, thank you so much. Now let's come to the Africa continent, where the European Union sees South Africa not just as a partner, but as a strategic ally, united by shared values of democracy, human rights, multilateralism. And this was the message from the European Council President Antonio Costa at the recently concluded South Africa-EU summit that took place in Cape Town. Costa, alongside European Commission President Ursula von der Leyen, met with President CERA Ramaphosa to reinforce diplomatic and economic ties. Meanwhile, European Commission President Dr. Ursula von der Leyen has also assured South Africa of the EU's full support as it prepares to take on the G20 presidency and host the upcoming EU-Africa summit later on this year. Our correspondent in South Africa, Innocent Semosa, has more.
This summit comes at a crucial time as both sides seek to strengthen strategic ties in the face of rising global challenges. Now, South Africa's President Cyril Ramaphosa is co-chairing the meeting alongside EU leaders, making a key moment in diplomatic relations between South Africa and the European Union. Now, the discussion, we do know that it will cover trade, security, and of course, cooperation, among others. The summit comes just weeks after the EU's top diplomat, Kaja Kallas, and several European nations backed South Africa in its role as the current G20 president. This follows a diplomatic snap by US State and Treasury secretaries who skipped key G20 meetings.
Today's summit focused on a number of issues that were covered and discussed during our summit. And they focus on strengthening our trade and investment relations, which are vital for the growth of our economies.
European Council President Antonio Costa highlights that the EU and South Africa are more than just partners, they are strategic allies.
And this summit has demonstrated that our partnership is not only strategic, but also essential. And we are fully committed to work together to strengthen our multilateral institutions by reforming them in the way to be more representative and also to reform our the international financial institutions.
So, President Ramaphosa, dear Cyril, as Antonio already said, we are 100% behind you in making South Africa's G20 presidency a big success. This is going to be the first G20 summit ever held on the African continent. I think it's a powerful symbol.
Some members of parliament have expressed confidence in the outcomes of this summit.
I really believe that our relations with the EU and South Africa are very important, and so we welcome today's discussions that are taking place at an executive level. It's very important for us to establish that, given the fact that EU is one of our most important trade partners, and given the fact as well that there is global tension when it comes to trade agreements.
From the perspective of the ACDP, we say to the developing and the developed countries that we too have to do what is good for South Africa.
As the European delegation and the South African government meet here in Parliament, members of Parliament here in South Africa have welcomed this meeting. They say that they can only hope that this meeting here, whatever that has been resolved, it will be indeed be translated into tangible actions. From Cape Town, South Africa, Innocent Samosa, Channels Television News.
Talk about realignments there following the trade war going on in the country, in the world at this time. Now we move to Egypt, where that country is set to reduce fuel subsidies to cost recovery levels by December this year as part of its ongoing economic reform efforts. The International Monetary Fund confirmed that the government's commitment to adjusting fuel prices remains unchanged following its approval of a $1.2 billion disbursement to Egypt under an $8 billion reform program. The country's current account deficit rose to 5.4% of the GDP in the 2023-2024 fiscal year, ending in June, and is expected to remain high before potentially falling to 3.5% in 2025-2026. Rising energy sector challenges and disruptions in the Suez Canal have contributed to widening trade deficit. Suez Canal revenue declined to $931 million in the third quarter of 2024. That's down from $2.4 billion in the previous year as geopolitical tensions forced shipping diversions. Zimbabwe has announced an ambitious plan to cultivate 120,000 hectares of winter wheat in 2025. The initiative is expected to yield a record-breaking 600,000 tons, surpassing last year's 562,591 tons, and significantly exceeding the national self-sufficiency threshold of 360,000 tons. The expansion also includes increased production of barley and potatoes, with barley cultivation expected to cover 6,500 hectares, producing 39,000 tons, while potatoes will be grown on 8,657 hectares with a projected yield of 236,250 tons. The Central Bank of Libya has announced that cumulative public revenues for the months of January and February 2025 reached 18.256 billion Libyan dinars, approximately $3.6 billion. According to the institution's statement, oil sales generated 14 billion, and then oil royalties brought in 3.7 billion, that's approximately $754 million. Tax revenues totaled 41.1 million, approximately $8.38 million, customs revenue 12.5, and telecommunications revenues 26.2 million, that's approximately $5.34 million. Revenue from the sale of fuel on the local market was also recorded. Afrix Telecom has secured a 14.3 million euro grant from the European Commission, and it's to extend the Medusa subsea cable system into West Africa. The funding awarded through the EU CEF digital program aims to enhance digital connectivity between Europe and Africa, boosting economic and technological development across the region. The project, titled Medua Africa, involves creating a dedicated African connectivity subsystem within the broader Medusa network. This latest grant is part of a broader 420 million euro investment by the European Commission in digital infrastructure which includes 142 million euros specifically for subsea cable projects. And just neighboring there, the Kenya Pipeline Company has reported a pre-tax profit of about 110 billion Kenyan shilling. That's about $77.1 million for the 2023-2024 financial year. And that's a 32% year-on-year increase. The company, which is a state-owned corporation responsible for transporting, storing, and distributing petroleum products, plays a critical role in East Africa's fuel supply chain, with Kenya a transit hub for petroleum products destined for landlocked markets, including Uganda, Rwanda, and South Sudan. Revenue climbed 15% to about 35.4 billion Kenyan shilling. That's about $273 million, driven by higher petroleum throughput and favorable forex rates. Total throughput volumes rose 6% to 9.1 million cubic meters, with exports growing 12% to 4.7 million cubic meters. And with that, let's head to the crypto space and see what's going on there. Oh, before we head to crypto space, we need to go to Berlin and find out what's going there. It's Chip, apologies. But I mean, I guess the issue of the Donald Trump and the tariff is still top on the news. The biggest, yes, how could I have missed this? The 200% tariff on European alcohol imports to the United States. When I heard that, Chip, is this even realistic at all? Or President Trump is trying to stop Americans from taking alcohol at all?
Yeah, that is, of course, the question. Is this realistic? And I think a lot of people who do consume alcohol would like to think it's not. And as for the EU, it does look like the EU is not backing down to that threat. The bloc's top diplomat, Kaja Kallas, has said that the EU will defend its interests and the only country benefiting from this is China, she says. For Brussels, Trump's latest threat is an attempt to double down on a tariff war that he started. And the EU wants to negotiate with Washington, and that is why the bloc's planned retaliatory tariffs are scheduled to go into force on April 1st. But of course, it appears that Washington is doubling down with the latest Trump threat, and the market reaction, of course, has been swift on both sides of the Atlantic. The S&P 500 has now tumbled into correction territory, and European stocks struggled yesterday and closed flat. And we have also heard this week from the president of the European Central Bank, Christine Lagarde. She warned that the uncertainties around trade policy and geopolitical situations are too high and making it challenging to maintain economic stability. Obviously, that's something that also people who consume alcohol will care about, Ini.
Yeah, but assuming, Chip, that this 200% goes through, what kind of impact would it have? What would the picture look like?
Well, in terms of EU-US trade, food and drink actually only account for a very tiny amount of total goods trade. But any tariffs will have a major impact on the EU's alcohol industry because the United States is a major market, and it accounts for about a fifth of the EU's wine and spirit exports. Now, over the last decade, the amount of exports to the United States has grown, and tariffs on alcohol could, of course, harm the industry on both sides of the Atlantic. Now, this week we did hear from the CEO of the Distilled Spirits Council of the United States, and he warned that European whiskey tariff would be very, very devastating for the American alcohol industry. And the last time the EU placed tariffs on American whiskey, that was during the first Trump administration. U.S. whiskey exports to the European Union dropped by 20%, Ini, and brands, of course, are also facing other risks because of this, and that is a change in consumer behavior. In Europe, there are boycott campaigns against American products from consumers and companies, and of course, if and when any alcohol tariffs hit EU goods in the United States, it will also leave American consumers there, considering other potentially cheaper options, Ini. So there's a lot going on here.
A whole lot, honestly, a whole lot, Chip. And I wonder what President Trump will give us this weekend. We'll just stay close to the White House and hear what's going to happen. But let's see what investors are doing intraday in Europe.
Well, the story is slightly different from yesterday, and European shares are gaining today after ending flat yesterday. Investors are cheering the fact that the Conservatives, the Social Democrats, and the Greens here in Germany have reached a deal that could relax the country's borrowing rules and unlock 900 billion euros in spending for defense and infrastructure. Now, the Euro Stoxx 600 is actually up 0.86%.
Wow, looks like there's a technical hitch there with Chip Ponder. All right. Sorry, Chip, would have loved to hear those numbers to the end. But I guess we'll have to do it next week. Chiponda Chimbelu from DW in Berlin. So let's head to that crypto space. And yes, the color is still red. It hasn't changed. Even though I do notice something kind of interesting, and that's what's going on with Ethereum. So while all eyes, or a majority of the eyes, are on Bitcoin, and we've seen it dragging around this for some time, something is happening with Ethereum. We see a drop that makes it look like it's Christmas, if you believe in Ethereum and you want to go the alt way. So we've seen it drop to levels that you didn't think you could see. And it does look like some investors are actually taking advantage of it. So that's why we see Ethereum right there in the green at this time at $1,894.63, gain 0.45%. I mean, it's just different perspective. So it's a red market, and we don't know when or where or how it's going to end, or what might prop up the market one way or the other. But we see some investors just quietly studying and slipping into the market. I wonder what this weekend will hold for this market. But for now, it's majorly red. Ethereum and XRP are actually making most of it. Now, let's see some headline stories in the crypto community at this time. We start with the Securities and Exchange Commission. They're considering classifying XRP as a commodity settlement. So you see why XRP stood out in green there. Some good news. So anything can happen. One good news can move even Bitcoin to levels that we didn't think. So that's one major one right there affecting XRP. Meanwhile, Vermont withdraws action against Coinbase. That's also a story going on there. Officially, they've taken off that legal action. In a court filing of March 13, Vermont's Department of Financial Regulation stated that the decision aligns with a similar move with the U.S. Securities and Exchange Commission, still in the U.S. And also another story is the crypto whale liquidation. A crypto whale liquidated for $308 million in leverage effort trade. So he's a large cryptocurrency trader known as Whale. They lost more than $308 million on a leverage effort position, underscoring the risk of leverage trading under volatile conditions. So you win some and you lose some. Or some people win and some people lose. And then also we have ARK Invest is buying. The firm purchased about $80 million worth of Bitcoin in multiple transactions. This happened on Wednesday. Is there some news that ARK Investors heard? Well, I don't know. You have to find out yourself. The most significant recorded transfer was 499 BTC worth 40.37. Shortly after that, there was also the 498 BTC worth 41.7 million, followed by the accumulation reinforces. This accumulation reinforces ARK's commitment to Bitcoin investment. So while the market is looking red, some people are still taking advantage of it. Let's find out what Adeni Olowoporoku, financial market analyst, sees amidst the red in the market. Hi, Adeni. Good afternoon and welcome to the program. I think you're on mute. Could you unmute, Adeni? Yeah, okay, so I can hear you now. Yeah, so okay. I mean, we see Ethereum, for instance. I mean, I've been looking at the price movement in the last couple of days, and seen some prices you didn't think you could see on Ethereum, even though it's an altcoin. I mean, it's a chief altcoin. And it does seem like some investors are taking advantage of this and entering the market quietly.
Yes, that's one of the things that we have seen recently, as many investors are looking to take advantage of the dip, right? Because in the crypto space, we all know that one of the most important things is when the market is down, it's not like it's down. We've seen Ethereum go from 1,800 to 4,000, and we've seen it go back again with this latest dip. So I'm not surprised that institutions are looking to stack up Ethereum at this very cheap price.
Yeah, and then we see even ARK Invest is even stocking up Bitcoin, and they don't seem to be afraid of when they will make back their money.
Yeah, obviously, Donald Trump is in power now. He had the first crypto summit in the US last week. So all the signs are pointing bullish, and the king of cryptocurrencies is still Bitcoin. So it only makes sense to stack more Bitcoin so that when SEC provides clearer regulations, you are at the top of the pile because you have a large stack of Bitcoin. So it's just more or less like we are seeing a race to the top for many institutional investors. And Bitcoin is obviously the coin of choice for now. But we've been seeing XRP2 emerging as the coin that many people are hedging their bets on because of its ability as a settlement token.
I thought by now members of the crypto community would take their eyes off President Donald Trump. He had a meme coin, his wife had a meme coin. A lot of people lost a lot of money when he said they were going to have a crypto reserve. Then everybody got excited, but when he announced the details of the reserve, the market dipped. So is the crypto community still looking the way of President Donald Trump for a boost?
At the moment, I think one of the issues that we have is that he's still the most powerful man in the world, right? He's the president of the United States. Even though most of the moves that he has made is beyond conventional activities or conventional wisdom. But you know that the crypto space too goes beyond conventional financial beliefs. And one of his closest friends is Elon Musk, who is known as a major mover of the crypto markets. So many people are still looking at the indications from the US president in terms of policy direction. I know he has also made several moves in saying that he wants America to be the crypto capital of the world. And despite the fact that the crypto space is still expanding globally, America still is the major driver of institutional investment into the crypto market. So we don't have any option than just to look at some of the indications from Donald Trump.
I wonder how the crypto market or investors are reacting to this trade war on tariffs and the latest one, which is the threat of 200% on alcohol.
I think from most crypto investors that I've spoken with, some of my friends, I think it has been a reflective moment for the crypto space because most of us, our bags are down. I have some of my assets that are down about 40 to 45% since the trade war started because the trade war does not really benefit anybody, to be honest. And even within the crypto marketing sector, because I also consult for some crypto marketing agencies, many projects are stopping their marketing efforts or they are pausing their marketing operations. So it has had an adverse effect in the crypto market. And also, I think this has also led to some proliferation of crypto scams, especially in Nigeria and also in Africa, with many people falling for Ponzi schemes, looking to resuscitate their funds. So it has had like an adverse effect, as you earlier suggested.
So do you see anything that could, in the near future, bring the markets back, bouncing or something?
I think one of the low-hanging fruits that could happen is when the SEC officially accepts XRP ETFs, right? Because ETFs in the last 2 to 3 years has been one of the major drivers of the market. So when we have the XRP ETF getting accepted, Solana ETF to get accepted, we might see some drives from that angle because institutions are waiting for the directive of the SEC. And also, we've been hearing some discussions. Binance 2 days ago got a $2 billion funding from a group of Chinese investors for a minority stake. So that shows that despite the fact that the market is down, major institutions globally are still investing in the crypto space. So it just takes a particular trigger, just like the way Donald Trump token led to a mini bull run that nobody expected. It's possible that the SEC accepting some ETF funds could actually spike the next bull run in the crypto space.
All right, we'll wait and see. Thank you so much, Adeni Yolo-Okporoku, financial market analyst, for your time and your views.
Thank you for having me.
All right, so that's it on the program. Thank you so much for being a part of this week-long journey that we've had all through. We start again on Monday. But before then, I'll see you tonight for the stock market report. Don't forget to watch this program all over again when you go to our YouTube channel. There's a lot of information that you want to glean from. I'm John McPaul. See you.